Business Cycle Fund from L&T. I'm going to bring in Dhirendra to give us a review of the new fund offer. Dhirendra, this fund will focus on riding business cycles through a dynamic allocation between sectors and stocks at different stages of different cycles in the economy. This basically means it will be doing a very tactical allocation. Tell us, from the point of view of retail investors, do you think this will work?
Like most other things in life, even businesses are cyclical, and there are businesses which are attractive at some point. There are businesses which are not attractive at some point. That apart, the market's preference for such businesses, or market's expectation or optimism or pessimism about many businesses creates an opportunity, and this fund wants to capitalize on such an opportunity. It's a new fund. It's a new fund being launched, and the investment case looks reasonable. But it lacks, being a new fund, it lacks history. And if this fund is able to capitalize on that, if successfully execute the strategy which it is planning to, it might present an opportunity. But it amounts to fairly agile fund management, being right with one's views, and and if the fund goes right, expect substantially higher return than the kind of diversified equity fund we suggest. But at the same time, if the fund manager goes wrong, be prepared for the downside too. Being caught on the wrong side can have equal penalization.
But Dhirendra, like I was just telling Nikunj, we keep telling retail investors to keep things simple, to pick simple funds, diversified funds. Would you recommend a fund like this one to a retail investor?
For most investors getting started, I suggest balanced fund. For investors who want to have an all equity exposure, I suggest them diversified equity fund. Then comes funds with a track record, and then comes invest regularly in such funds. So I would say that look at this fund, look at it positively, but don't invest. Maybe let it incubate some performance history and then get started.
But Dhirendra, I mean, the markets are trading, which means there are investors watching the show right now who are constantly looking for a specific exposure to some sort of tactical fund management, which is what this fund will offer them. Now, if these investors are looking for a fund, would you recommend they use the NFO, or is there another alternative already existing in the market right now that has a track record that they can use instead?
I think investors should wait for some track record. And of course, there are not too many other. There's not a stated business cyclical, a business cycle fund. But there are other funds which try and achieve, or they try and execute similar strategy. If you look at the large number of opportunity fund, they try and achieve the same goal in some other way, and they call themselves differently. Business cycle fund is one such, is stating very clearly that it will try and capitalize on cyclicality of business or cyclicality of market to capture return. But there are other funds which achieve directly. Allow this fund to incubate its performance history, and then surely consider it.
All right, so there you have it. That's Dharendra's review of the L&T Business Cycles Fund. Let's take a few questions from our viewers. Shiva wrote in, he's been investing 1,000 rupees in the UTI Opportunities Fund. He wants to know if it's a good choice for the long term. Interestingly enough, he did get in touch with us after he started the SIP. But what's your recommendation on UTI Opportunities? It's a good performer. Should he continue?
UTI Opportunity Fund has built a credible track record in the last 5 years. It has also had a fund management continuity. Of course, the fund manager changed about two and a half years back. But the fund has kept up the good work. And unlike most other opportunity funds, this has kept its large cap focus and has done well. And it is not wavering from its focus. So I would say this fund has done well, and the continuity prevails. The strategy continues. So you keep your investments.
All right, keep that investment going. Rajat has written in, 19 years old. It makes me so happy to hear from such a young investor. Now, he wants to begin investing in mutual funds, and he wants you to give him a fund that he can use for the next 3 to 5 years that will give him 20% return. He's looking to make an investment of 1,000 rupees a month. I'm curious to know why he's only investing for 3 or 5 years if he's 19 years old. But let's assume he has a specific goal, Dhirendra. What fund should he be using?
I can suggest you the fund, but the problem is the 20%. No fund can, I cannot say, or if I say so, I'll be lying. 20% return for somebody who's getting started and investing, a small sum with high expectation. you could be in for disappointment. Compare the options. In a recurring deposit, you will get 8.25%. In a bank recurring deposit, you will get some similar return for a 3-year term. And I'm confident that on a 5-year basis, you are likely to get superior return even from a balanced fund. Whether it will be 20%, I'm not sure. But I'm confident that it is bound to be much better than recurring deposits. So consider 1 or 2 balanced funds.
All right, that's fair enough, Dhirendra, that you can't guarantee a 20% return. But could you be a little more specific about which fund you'd like him to invest in?
If I have to suggest some, I would say ICICI Prudential Balanced Advantage or the HDFC Balanced Fund.